Welcome back to Enlightened Trading. I'm your host, Conrad, and today we have another look at the stock market. Before jumping into price today, make sure you like the video down below, and of course, you subscribe to my YouTube channel. It really helps me out, and of course, I appreciate it very much. So, as you can see, this is the S&P 500 SPX index, and as I said, I thought it was rather likely that we would consolidate sideways here in this range, and we actually got it. We now have a higher high on a daily time frame compared to these three touches, and actually it aligns pretty nicely with this channel here on the top. So maybe there really is a bear flag coming into play, and this weekly lower high is now set compared to 3,394. So we would now look for further downside if this actually plays out. But until that happens, I would need another touch of this channel in here on the bottom to confirm this bear flag, which would approximately send price downwards, not too far, of course, but approximately to this Fibonacci range here of the 0.38 2, and also lining with support here in this area. So this wouldn't be too surprising if we actually break downwards here. But as I said, we would still need another touch. But until then, this is a small uptrend, a short-term uptrend with lower high highs and higher lows on a daily time frame. So there is not too much concern yet until we get this third touch of around 3,013 here on the SPX index. SPY, of course, looking completely similar. On NASDAQ, still climbing higher. Actually, I mean, this is pretty interesting because, of course, the NASDAQ is copied or aligns with the big tech stocks. It's not too surprising that we see it climb that high. The Russell, as you can see, which aligns mostly with smaller cap stocks, is still struggling. I mean, it's not just struggling, but I mean, it's not yet at all-time highs, which of course is pretty rational compared to where we currently stand. So yeah, and actually we could draw a trend line here, and we'd now be on the verge of breaking this trend line. So maybe there will be some signs of weakness coming into the next few days. So yeah, this is not too unlikely if we break down that we actually come back down pretty far. We could draw a Fibonacci retracement here. Yeah, we nicely got rejected of the 786, and maybe we will even break down to the 0.382. This would not be too surprising. But until then, I would still remain bullish because, as you can see, we can align these highs in a horizontal way, and we have ascending lows. So there is still a bullish bias also in the Russell index currently. So now moving on to the bigger stocks, starting off with Amazon. I mean, this is pretty nuts because many of these stocks are currently, at least in my opinion, pretty much overvalued. I mean, of course, they are strong and very established in the market. Yet, I mean, they didn't have something very innovative, which came out recently. But as you can see, prices still climb higher and higher, since of course they are still correlated with inflating the markets by quantitative easing, which the Fed is of course doing. So it's not surprising that markets are climbing higher regarding our current monetary policy. So yeah, I mean, Amazon now currently valued at 3,000 US dollars, completely insane. I mean, it's not insane, but how prices move in these markets is pretty nuts. And of course, a very good example of this is Tesla here, moving above 1,400 US dollars per share. So I mean, you would have made a bang if you bought here the dip in the coronavirus pandemic. So yeah, I mean, there is not yet too much weakness which would stop Tesla before 2000 or 1500, which are of course very psychological levels. But these are blue sky breakouts. So and of course the TD sequential would be important, since it would give you a time window in where to enter or exit. But currently the TD sequential is telling you to be long still. So I'm not too concerned about anything here in Tesla. But I would of course look for a retrace, maybe down to 1030-ish, to get a retest of this resistance here, and then a follow through for another bull run. But since this is pretty far downwards, of course we can just make a daily higher low and then continue the uptrend here on a daily time frame. And of course the weekly is also still looking very strong and bullish. Of course we are a bit extended. And Apple, also aligning. And what has Apple been doing in the last few months? I mean, they have just been selling iPhones and products like they usually do, but I don't think there was much innovative technology coming out. So yeah, I mean, prices are, I mean, it's in some shape or form they are overvalued, and maybe it is also because some of these investors don't know where to put their money, because of course we have such low interest rates that you don't get anything for your money anywhere else. So you might as well put it in the stock market. Maybe this is happening again. This already happened. I think in the 20s boom. So yeah, maybe this is even happening again. I don't know. I would have looked into the numbers and gather more information to really say anything about that. Uber now aligning very nicely with what I've been saying and what would have been my trading strategy. I told you I would be a buyer here, down from $30 to $28, and we now nicely rebounded off this reversal candlestick here on a daily time frame, and of course a very nice 4-hour candle here, wicking down to my initial target and to prior resistance area. And I would now say that we are most likely done with this time correction, and I would look for further higher prices, and a retest of $38 would be very likely, in my opinion. We had sort of a falling wedge here on Uber, and maybe we will even retest it. I don't think so. I think it's actually more likely that we consolidate here in the range of $33. Move once again to this prior daily high of $34. Maybe consolidate further and then break out of it to again higher high on the daily, and then above $38, or at least to it. And of course this trend line seems to be pretty important, so maybe we will be rejected before reaching that level, but we could then form a sort of a cup and handle, maybe even this being a cup and then this handle. So there is still a lot of bullish bias here in Uber, at least from my perspective. Walmart having a very nice trading day yesterday. So congrats to the bulls. I don't know what happened or if anything happened, but a large trading volume here on the Walmart. Still seeing higher prices here in Spotify. Still moving sideways. So this would have been a very nice bullish trade in the last few weeks. As you can see, all these bull moves are corrected or are being corrected through time and not through price, which of course says that we don't get these large retraces down to resistance or to prior resistance, and we just consolidate through time sideways, and this is actually what has been happening. As you can see, very clearly, it happened right here, here, here in this consolidation, and once again here around $260. We're still seeing sideways corrections. Weekly time frame is still telling you to go long regarding the TD sequential on all time frames. Of course, we had this line sell here on the top, so maybe this will be still important, and we will finally get our retrace down to 200 or to $192. I do think that is still likely, and this would be now my buying area. Okay, I think that's it for today's video. Thank you very much for sticking through it. And of course, if you get any important information out of it, make sure you like the video down below, as I said, and of course, subscribe to my YouTube channel. And in the end, also make sure you follow me here on my Instagram page for some fun along the way, posting some memes on a regular basis. Okay, so thank you very much for watching, and I'll see you guys and girls, you people, back next time. Bye.